Good afternoon, everybody. It is November 30th, 2020, Cyber Monday. And I hope you all are shopping online because the deals are very good right now. I've bought a bunch of stuff already. One of the things that I got last year, actually, I want to show you, because if you have pets, this is pretty cool. So as you know, this is my dog, Belle. This is a trip about 5 years ago, 2015 in Times Square. Notice I don't even have to hold the leash. She's pretty cool about things like that. And this is General Leonidas. This was my daughter's dog that had lived with me when before I moved, when she was with me. And she just moved downtown and decided that it was too much for her to handle a full-time job, a full-time baby, and a full-time dog. So General Leonidas is with me now. And to celebrate them, even before he was living with me again, I think this is the third time, my girlfriend got me these. So I don't know the company that did this. I forgot to ask, but they do these pretty cool photos. They, put them over a painting. So if you really like your pets, this is something that you can get out there right now. And I think it's a great gift to give people. So if you figure out who's doing this, it's out there and it's pretty neat. So General Leonidas and Shield Maiden Belle. This is something that a friend of mine runs. So if you need coasters that are particularly entertaining or colorful, they actually have another website too. But 8-Track Romeo, run by Michael and Susie. I went to school with Michael, and they really have kind of semi-cornered the market on a lot of these things. Not that there's not a lot of knockoff competition, but they've really come up with some neat stuff. So if you're looking for gifts, there you go. Something cheap and easy before we get into the stocks. So I wrote an article today, Macro Monday article, just got it out way later than I wanted to. And I wanted to talk about kind of the backdrop that's going on, slow growth forever global economy, and it got hit by a massive economic shock that's still going on, and economic indicators are starting to slow down. And as we discussed on Friday, the Fed's bazooka is running out of ammunition because the Treasury just took away over $400 billion. One of the things that I point out here is that secular decline meets the coronavirus shock. And even though we got that initial recovery on PMI, second month in a row, PMI fell. This is a leading indicator. So it's telling you that things are not progressing the way that we'd want. So while people screamed and screamed, V-shaped recovery here, I warned you that probably would fall off. Now, does it head all the way back into recession territory? I don't know. I think that maybe for a brief moment, maybe January or February, it does. Then it probably starts heading back up sometime early next year, especially by summer. So I'm not too worried about a long period of PMI moving sideways like it did here in 15 and 16. I do think it gets back up to here because it has a lot of room to close. But in the very short term, as companies continue to retrench and we get through this last phase of coronavirus, hopefully this is the last phase, hopefully things are normalizing by summer, this should come back up. Now, if we get bad news on coronavirus, vaccines don't work as well, the mRNA vaccines are a little bit less good for the whole population and maybe should be stuck only to emergency use, which is what I think is going to happen. You could see the economy have another stutter step before it really gets rolling again. So I think you need to be aware of that, but also be aware that there's still a ton of liquidity, even if the Fed pulls back. At some point, we know that there's always more liquidity coming. So the pullbacks, we just have to figure out, okay, how far back is it going to go? At what point does it start to jitterbug before it goes back up, which seemed to only last 2 days last time. So we have to keep an eye on this as an indicator of what's coming. And then once whatever comes, be ready to jump in. Covered some of the coronavirus stats. The hospital beds are full right now, and that is negative. So I would be very worried about the next 2 or 3 months. As we know, valuations are incredibly stretched. The margin jumped back up, just heading higher and higher, almost at the peak from January of 2018 again. And with that liquidity, calls have risen quickly again in the last couple of weeks. Small trader buying of calls. So we've talked about leverage on top of leverage. When was the last time that happened? Right before the financial crisis. And before that, right before the tech crash. And now margin is higher. Then we covered very briefly last Friday, maybe a little bit more than briefly, it took a half hour, that the Fed is cutting all sorts of stimulus because the Treasury is taking away the money. So these are the items that are getting cut as of December 31st. It's all the corporate credit market facilities. And that really, I believe, was the number one thing that drove the stock market up, was the fact that the companies were basically guaranteed that they wouldn't go bankrupt. So now you have a bunch of zombies where the stimulus is going to be taken away, the backstop is going to be taken away, and at some point the market's going to have to look at them a lot more objectively. The term asset-backed securities loan facility, this is going to be difficult to deal with because a lot of loan groups from the bonds that have been issued, packaged and issued, are no longer going to be backed either. So these loans have to get paid back. Now, I think President Biden is going to surprise people and forgive something in the line of $50,000 of individual student loan debt across the board. And I think that that'll help here because it'll bypass a Fed facility and a bunch of lenders will just get big infusions of cash. So that could be decent for the banks as they deal with higher loan defaults in other places, automobiles in particular. The Main Street lending program, which was supposed to go to small and medium-sized businesses, really never got used. I think it was only $6 billion in loans out of some enormous number that they were allowed to loan, 250 billion, maybe 400 billion, because it was leveraged. So they never really used this, and that got pulled back in. Mnuchin wants this to get converted to grants, and I think that's a great idea, to be honest with you. I think there's a lot of small businesses out there that if you can vet and look at their tax returns and know that they're not lying and creating fraud, which, some of the PPP loans were fraudulent, you start giving businesses grants that can show a history and show that they're really operating. The municipal liquidity facility, again, wasn't used a lot, but it was there to backstop the municipal debt. And while I've been recommending municipal debt up until a week and a half ago, I would tell you right now that if you have municipal bond funds, suddenly, because I don't think anybody really expected this to get pulled quite like this, unless the Democrats win the Senate, a lot of municipalities, a lot of states might have problems. So I think that in this very short term, if you own municipal bond funds, you probably should dial those down. They shouldn't be held like bank assets like you could do before. You have to treat them like a bond portfolio that can fluctuate 10% in either direction. Now, if you are of the belief that eventually there's not really any bankruptcies from the municipalities and the states, that at some point they are in fact bailed out, then just understand the volatility that's coming. But if you don't want to see this part of your portfolio take a 10, 12, 15% drawdown, it's usually the worst it's ever gotten, then go ahead and trim this to a size that's comfortable. So be careful with your muni bonds, because we almost could hold them like money market debt in the past, and not so much right now. This chart I haven't shown you before. Of the 27 some trillion in US debt, the Federal Reserve holds about 1/6 of it. Now consider how much is held by foreigners and then banks. This is a huge percentage of US foreign debt. It's 1 out of every $6. So for the Fed to keep pumping money into the economy, there has to be debt for them to buy. And right now, there's not really any excess debt. So we have this gigantic thing that we've built out of debt, and it takes more debt to keep it going. Otherwise, it has to deflate. So that's why the Federal Reserve presidents and Chairman Powell have been basically begging for fiscal stimulus. Oh, not sure why this didn't take. I'll have to add that link again. Oh, there it is. So investment quick thoughts. The most obvious reason the market. It is Friday, November 20th. Oh, there we go. The most obvious reason the market can correct is if the economy doesn't respond as quickly as we're hoping. And if these vaccines end up needing to be the ones from Merck or Novavax or somebody else, I do talk about that up here, right? If the vaccines end up not being Moderna and Pfizer's mRNA, which come with pretty big risks, and we have to wait for Merck and Sanofi and Novavax, then we're not getting immunized any sooner than summertime. And that's probably even the reality with the mRNA and DNA-based vaccines that are starting to come online shortly, at least for emergency use. I think the stock market might be just a little ahead of itself as to when it expects the rebound to occur. That said, Merck, I'm pretty interested in. One of the other things that could get the stock market into a bear market is if we do get a sharp rebound, then the Fed's going to need to pull back because we could see inflation shoot past 2.5% pretty quick. Why? Because the velocity of money, which had been coming down for a long time, finally fell off a cliff, basically hit its absolute bottom. I mean, it can't really go below 1, otherwise that means that there's no net transactions in the economy. So the velocity of money has really slowed down. It just started to pick up. Well, what if we get a V-shape in the velocity of money sometime next year? And it shoots up here. It even goes past this plateau. It gets back up into this area. That would stimulate inflation pretty quickly. And then the Fed has to pull the reins in. I don't see a lot of hopeful scenarios for a stock market in the short term. The wild card, of course, is that if the Fed has less liquidity here in the next month or two, then you could get some choppiness at least and a possible very sharp correction. So be very careful about waving the FOMO flag and your fear of missing out. We missed out on a lot of this stuff. So now we have to wait for it to come back. So don't be afraid of it. It already happened. If you chase these markets from here, understand the risk you're taking, you better do a very deep dive into every single investment. If you stick with the plug and play, you'll be safer. But the more you expand out and the things you know less about, the more risk there will be. So plug and play dividend stocks. If you take a look, you have an awful lot that are overbought or close to overbought. AT&T remains in the buy zone. Illinois Toolworks is looking interesting. Microsoft has gotten beat up just a little bit. Interesting. Take a look at Microsoft. Remember, I described these guys as a beast. Sideways, that's almost as bad as it gets for these guys. So this choppiness in Microsoft is interesting to me. Now, I still think that our buy zone is way down here, but I am going to raise it just a little bit here today. Not much, just here. So at about 192, if you wanted to buy Microsoft, you just couldn't take not owning it anymore. I think at about 192, you could do that. I still think there's a little bit more serious correction coming, but I've been wrong so far. So we'll see. I usually don't end up being wrong, but early is clearly an issue. Lockheed Martin, we talked about last week. Apple, we haven't taken a look at here recently. Let's take a look at Apple. If you've noticed, there's been some sellers in Apple, including Warren Buffett, but also some big sovereign wealth funds. And that's why it's been chopping along. You've got big sellers in here. See that? So I think there's a pretty good opportunity here as it gets close to 100. And I think that's probably going to happen. Somewhere in the 90s, I think you probably want to start building that Apple position. Have awfully big support here in the 80s. The gold stocks are still worth buying, especially on any down day. Take a look at Newmont. This is the one you want to wait for the S&P to drop a bit, right? At about 50, right about here, 52, 53. Probably need to get in there. It's almost there. It's within a couple bucks. if you want to sell cash secured puts, for sure you can go ahead and do it. Barrick Gold is coming up on support again, and it's down 22, 23 right now. I think this is clearly a stock that you can buy, and it probably is going to go much higher. So there's pretty big buying pressure here right around 20. See the buyers there waiting for it. That's where they got in before. Probably were selling up here, driving this down. The idea that there's some huge shock coming to gold, I think, is probably a pretty bad argument. What we've seen is the dollar and gold move in tandem, both up and down. So the dollar hasn't fallen, driving gold up. It's been the other way around. They've just been moving together as a sign of strength or a sign of weakness. I anticipate that the dollar will get stronger. I've told you that all along, that I don't think a Biden presidency is bad for a dollar. Now, there might be some momentum left to the downside, but I've showed you the dollar charts with where the support is. And at this point, the Federal Reserve is pretty unlikely to have the ability to even print a ton of money because A, there's not US Treasuries for them to buy up right now because the fiscal stimulus is dried up, and the Treasury took away the CARES Act facilities. So this range here probably gonna be pretty stable, just because there's not a ton of money printing going on anytime soon. Now that's bad for the stock market in general, but it's good for dollars, and I think it's going to be good for gold because it's a contrary indicator. The gold's just not going to listen to any reasons that you have. I've seen gold move in the direction of the dollar a number of times. And the reason why devaluing the dollar doesn't always inflate gold is that these little devaluations don't tend to matter. Now, if the dollar did fall off a cliff, and then down here, in the anticipation of money printing, and then they did print money, then I think gold jumps up. But right here, I think it's probably a pretty smart idea to anticipate that the dollar has maybe a little momentum to the downside, but then it's probably going to start firming up, especially because of what Mnuchin just did. You go through all these. Merck, I think, is worth looking at. They've got 2 vaccines in development. I think one of them certainly will be successful, the more traditional one. But if they get the one that can be orally administered to work, boy, oh boy. If they have a vaccine that you can just drink, I think that you probably are going to see an awful lot of people buying Merck stock. So I think it's tough stock to wait on, but it's gotten really close to our buy zone. So I think the idea here, so we see a new fib. You may not believe me, but I play with these before I get on here. It's going to give us some new levels. Suddenly see, oh, maybe it is a little bit higher. So you could probably buy all the way up to about 77 on Merck. Interesting, huh? Kind of look at that structure there, and it created a fib line. Almost like the chicken and the egg. Which one did come first? I don't know. But they just seem to meet in these places over and over again. So if you're a dividend investor and you can get Merck in the middle 70s, you should probably do it, at least for a little bit. And then if it gets all the way into the 60s, you probably buy a little bit more. There is really big support as it gets into the 60s. I'll take a look at the growth stocks. And in particular, I want to take a look at SIRI that I just introduced. I think that SIRI is about as close to being a buy right now as it can be. And I think the growth story there is just enormous with all the new cars that are going to be sold in the next 5 years, having SIRI built right into them. So the projections are roughly a triple in revenues and profits for them. So I think that this is one of those Liberty stocks that you have to take a look at and go, wow, this guy at Liberty just keeps making money for people. I think he's going to do it again. It's taking him some time, but I think this is going to break out past the highs, and then I think it's going to go way up here, way into the teens. So this is a double or triple waiting to happen. And I don't think it's going to take all that long. Once we get through the choppiness in the market, I think this one probably runs. So you can split hairs on nickels and dimes down here if you want. But I already took a starter position, and I'll add to it at about 625, 630, right in there. You could try to get it a little bit lower. But again, take a look at all that support right around $6. MP Materials had those crazy jumps off the IPO, and now it's starting to come back a little bit. So it's down to 22. I was able to just kind of structurally do some things here. I took some of my lines out, but this is hard to write structure for because it's a very short chart, right? So I think that right about here, probably about as low as it goes. I doubt if we get into this range down here, but because that's where an awful lot of support kicks in. I would be remiss if I didn't say buy this in the upper teens. I think upper teens is probably where you got to get it because it's that area has represented both a breakout and support already. So, right, it was resistance, and then it broke out through here. So if it comes back into this zone, I think you probably want to buy some MP Materials. And again, we talked about this last week, is that there's such a shortage of rare earth metals for processing in this hemisphere, and these guys are going to have a monopoly on it. I really truly believe that this could be a $10 billion stock in 5 to 10 years. It's under $1 billion right now. So I think you need to buy this one in the teens. We go through here. Freeport McMoran has run up. PTC has run up, right? Nobody ever believed in PTC, and then all of a sudden, right? Mentioned it 5, 10 times. There you go. So now you're stuck waiting for a pullback again. And where is their buy zone? Looks like right in here, doesn't it? This jitterbug area, fought with it, and broke through. So unless there is a correction that really is correlated and large, you're just trying to get this one under 100 now. Now, if there is a correlated large event, then you hold off and you wait all the way down here. So this is a pretty wide buy zone. You just got to understand how wide some of these buy zones have become. You know, it's just the nature of the market right now that you have the thin traded leveraged on top of leverage on top of leverage, elevating these stocks. And if money becomes less easy for any reason, either the economy's too hot or the Fed just doesn't have anything to buy or pump in, you know, there's a lot of reasons why the dollar could get a little stronger, why asset prices could come down, why liquidity could dry up. The one thing that I do think is good is I noticed that the OPEC members are cheating, and I think that there's going to be more oil pumped come January and February and March, whether they declare that's what they're doing or not. They might as well just say they're going to pump more oil so that the market understands it, rather than cheating and letting people try to figure it out. So again, in a bullish scenario, I think you have to buy PTC anywhere under 100, really, anywhere in the 90s. But in a bearish scenario, you know, come all the way back down into the 60s. So you're going to have to know the difference. SunPower is a stock that I said will eventually get on the S&P 500. It's about 1/3 of the way there. You know, I don't know where I want this one anymore. Seems like right here makes a lot of sense. So I don't know that we'll ever see it at 12 again or 10, but this 14, 15 area seems to be pretty plausible. Remember, these are really volatile stocks. So volatility can work down just like it works up. Nobody remembers that when things are all going up. Everybody remembers when everything's going down. All right, let's see. Let's take a look at ITRI real quick. I'm dying to get this stock. Teased me that one day. I mean, you're really getting one-day teases. Look, one day it teased me. I wasn't smart enough to buy it there. One day it teased me. Now it's way back up here. So where do I think this goes? Well, look where it broke through, fought with it, broke through. I think that's probably pretty decent support. I have a hard time believing. I don't even know that I need, honestly, I don't even know if I need those lines anymore. It's a whole new company now. I think we need to take a look at it in a whole new light. Look how sharp that move is. That's just the nature of this market now. All the way down here. So what's important here? Look at this. A couple lines on top of each other. So I think that probably makes an awful lot of sense right there. Right in here. And this is, you can narrow it. I think that would be maybe the ideal zone. And if we wanted to widen it a little bit, none of these make any damn sense. I think, see right there, I think things would have to get pretty bad for that to happen there, but you never know. I am curious to know how powerful it is, Mnuchin pulling that money away from the Fed, right? You start talking about leveraged $400+ billion, and you wonder to yourself, the hell does it mean? What does $27 trillion of U.S. debt mean? What does a $7.5 trillion Federal Reserve balance sheet mean? What does it mean that the Fed owns 1/6 of all U.S. debt? I really don't think anybody has much of an idea, other than you have to think of it in relative terms. Are other places in the world in better or worse shape than us? And universally, I think the answer is almost everybody's in worse shape. However, you take a look at the Asian trade agreement that just took place that really circumvented us, went around us. And you got to ask yourself a question. That's the fastest growing place on earth with the biggest money. What happens if China really jumps out ahead of us? And that's a potential problem. I think it's a longer range play, but I think it's something to watch over time. One of the reasons that we're in that emerging markets, internet and e-commerce ETF is I think that might be the biggest money globally around the world. So, I think you need to be real careful when you think about things in macro terms, because even though we're probably going to get more manufacturing to come back here, if global trade falls and we can't sell abroad because there's trade pacts around the world that basically put us at a disadvantage, are we reduced to competing on price? It's hard to do from far away. So we really need to think about what is valuable in the world. And I think you come back to services and things that can't be easily replicated. I don't think manufacturing is that important other than for providing some jobs. And not even that many jobs, because the robots are getting a lot of the jobs. So this whole focus on bringing manufacturing back that we've had to go through the last 4 years has just been so economically wrong that I think we've lost our focus. And we need to get it back quick, because we need our technology people, our business services people, we need to be able to do business with the rest of the world, even if we're not selling them a widget. If we're selling them technology or services, that's A, more profitable, and B, more sturdy in most cases. It's easier to replace a die in a tool and die machine than it is to replace your entire cloud infrastructure. Think of it that way. So here with Itron, I love this company, and I think that they're going to get a ton of business from the government at some point. But a lot of these governments, remember, we just talked about the problem in the municipal debt market, and that facility is going away. And the Republicans don't want to help cities and states, not until they're really bleeding. So that means that this could go the other way. If I had to peg it, I'd say somewhere in the 60s is where you buy Itron. Somebody asked about SunPower, whether or not to take profits. Well, gee whiz, what do you think? Scale in, scale out. Yeah, so Alibaba, I got a starter position last week, just a little 0.5%, 1% position, along with that ETF, where Alibaba is the top holding. And there was news on Ant today. So Ant is probably not going to get spun out anytime soon. Maybe by the end of next year, but maybe not. And that was going to help Alibaba a lot, I think, in the short run. In the long run, I think they benefit from holding on. So I think that Alibaba holding on to Ant Financial is good for Alibaba. May not be good for Jack Ma. So I do want to keep accumulating this. If it gets down in that 225, 230 range, right down in here, I'm going to take a bigger bite. Because I do think that this is likely to be, way over $1 trillion company at some point. So the people who are thinking that President Trump is going to delist Alibaba on the way out the door, there's not really a functional way for him to do that. There's not enough time. So, just you need to throw out anything that you think that Trump might do on the way out the door. If it happens, deal with it then. But I don't think he's going to bomb Iran, because I think the generals have told him not to do it. And ultimately, I actually think the generals would tell him no. we don't have time to do it before you're out of office. That's what they would say. We're not prepared to do it just yet. So the idea that he's just going to take punitive actions, you know, I don't think it'd be hard for a court injunction to block that, right? What's national security defense is he going to make on Alibaba, right? And that's what it takes. You can't just do it on a whim. You got to have a reason, and any reason you give is challengeable in court. It'd be very easy for Alibaba to get an injunction. Any of these other stocks that you're interested in that you want to talk about? I will tell you, the only stock that's going to come off of this list, I think, is Workday, because their returns have just not been what I want. You know, if you take a look at the returns on these stocks, right, where's Workday? I guess that's actually not that bad. So, I mean, this is an awfully good list of stocks. I think Berkshire, did you see the article in Barron's? I posted it. There you go. Suddenly Barron's is telling you that Ford can double from here. We basically have the same price target, but I was telling you at $5 and $6 a share to buy Ford. So Ford is another stock that you should probably buy on the dips. Big support around 7. You know, we really got to find another set of lines here, don't we? What kind of company is Ford now? There is no newer set of lines for these guys. It just went down for so long. That means that the breakout, once it gets through here, man, that's going to be a hard breakout. If they catch the imagination of the millennial trader, man, it shoots all the way up to close to 30. It's been there before. So I think you need to have Ford. I think probably 7-ish is about as low as she goes. In fact, I would move that right up to there. Let's take a look at a very short-term time frame. Really almost anything under 9 all the way down to 750, I think is a pretty clear-cut buy right in this range. And again, I think we're in the buy range and we're right in the middle of it. So you're catching an early breakout from what I can tell. I mean, this formation just looks like it's going to go up. Well, lucky for you, Barron's is only $52 a year. You know, the articles, not the articles, but the things I gave you here, the things I suggested that you subscribe to, Bloomberg, Value Walk, and Barron's, and maybe the Wall Street Journal. If you're an investor and you're investing your own money, if you don't have these subscriptions, honestly, I don't know what I can say. You're underinformed. Now, Sentiment Trader of these 3 is the one that I think you need to really just start learning how the market works. Stock rover screening is good, but if you just want to, research the ideas that I'm giving you, which I'm taking from 100 sources, that's fine. And TradingView, if you have good charting software at your brokerage, which you probably do, learn how to use it, save the money on TradingView. TradingView is for people who are going to swing trade. If you're a position trader, right, if your trades are meant to be longer term in nature, what you have at your brokerage is just fine, right? Will Delta be available at 27 in the next correction? Let me check the crystal ball. Let's see what the crystal ball says. Well, that seems to be a jitterbug zone with multiple lines, so we'll probably have to update this. Probably can throw out the worst case scenario. Oops. No, maybe. I think 30-ish is pretty likely. It's pretty close to 27. Now, this is huge support down here, but it's got pretty steady buying in here. Interestingly, Buffett was a seller in here and other people bought the stock. Buffett's thesis, and I, with all the other airlines, I agree with it, is that business travel is not going to come back anywhere near what it was, 30, 50% down. Those are huge margins. Those are the most expensive seats. So I think you got to be careful. I don't think that most people think about Delta the way that I do, which basically is a technology and more advanced type of company that just happens to fly airplanes. And I don't think they think about it as a company that might spin off other types of products or divisions or just benefit from those things. So right down in here, or these lines, touch each other. You have the big confluence there. And you can make an argument for buying Delta, right around here, 33, 34. But again, you need to consider how bad is the market. If we're really going into a bear market at some point, I think you'll worry about these other levels, right? And then I think you got pretty big support down here. So that's what I would really be concerned with. One of the things that seriously, Delta's not even this company anymore, so you can get rid of that part of the chart. So we should find where's the new uptrend. So the new uptrend starts way down there. Yeah, look, there's a 618 line there. I guess go all the way up to there, 35. Yeah, well, it really does depend how bad things get. I wish I knew that answer. That would help me a lot. I don't know how big of a deal it is, these Fed facilities. I suspect big, but do they do something else in the meantime, right? Do they do something different? So right here, there's no buyers. See that? For a couple of years now, mainly because this was during the panic. So we need to watch. See, in 2018, we started to get some buying in there. Yeah, this is where people will sell, right? Because all these people bought up here. So they get back to even, see some selling pressure. I think you're kind of in no man's land right there, right? Go into here, I think you buy. Go up to here, I think you sell. If you own it now, I think you're just waiting. If you don't own it right now, I think you're just waiting. CRISPR, overbought, but it's a heck of a company. If this whole sector comes down, I think it could, right? Look at the low volume that drove the price up. Leverage on leverage. The leverage goes away, pretty steep drops. So CRISPR in the 70s, I think you got to jump all over. That'd be a big correction. Maybe you get some buyers in the 80s, 70s or 80s on these guys. Guess we can push that up to that jitterbug zone right there. See all that? I think this probably is higher now. I think it probably has a higher bottom. Well, let's leave that bottom down there. But keep an eye on CRISPR, because this is another company that with just one or two breakthroughs, they could be a $500 stock. So that's what we want. We want companies that if things go well, they don't go up 3 or 4% better than the market. They go up 300 or 400% more than the market in 4, 5, 6 years. All right, I think that's it for today. I don't see any more questions. All right, go out and do your Cyber Monday shopping tonight. Get it out there. If you order today and then get the Amazon delivery 3 extra days down the road, you get $1, maybe even $3. All kinds of credits are offering. All right, covered call tomorrow morning. Take care.